Okay, we're going to move beyond oil. We're staying in the energy markets, and analysts are concerned about natural gas markets, which have also reacted sharply to the geopolitical escalation that we've seen. Now, European gas prices have risen sharply since the onset of the conflict. The Dutch TTF benchmark, which is the key reference price for European natural gas, moved from around €30 to around €63 during the onset of the crisis. Now, this represents a 100% increase, in fact, over 100%, within a relatively short period of time. Now, around 1/5 of global LNG shipments pass through the Strait of Hormuz, including exports, importantly, from Qatar, one of the world's largest LNG suppliers, who also halted production at the onset of the crisis. Now, Europe remains particularly sensitive to supply disruptions. After a cold winter, gas storage levels are at their lowest level since 2022, leaving the region even more susceptible and dependent on LNG imports. Asia is also highly exposed to developments in the LNG market. The region accounts for roughly 70% of global LNG demand, with Japan, China and South Korea amongst the largest importers. Now, a significant share of those LNG shipments to Asia originates also from Qatar and other Gulf producers. Now, in Asia, the spot LNG prices have already responded to the rising geopolitical risks. The Japan-Korea marker, the key benchmark for LNG cargoes in Asia, has recently risen from around $11 to $16. Now, if LNG flows from the Gulf remain disrupted, both European and Asian buyers may increasingly turn to US LNG exports. Now, this could gradually tighten the domestic balance and provide additional support for US natural gas prices. But here's the tricky moment for the US economy. Higher gasoline prices may support the country's energy sector, but sharp price hikes can hurt the overall economy through inflation and lower consumer spending. Now, natural gas price increases in the US haven't been as sharp as in Europe and Asia. XNG against USD price moved from around $2.8 to $3.35, with a short-term spike above $3.6. However, this is enough to cause concern amongst American consumers. Now, market analysts believe this is one of the factors that could force Trump to end the war in Iran. However, there are of course doubts that would be the case.